Hey everyone, welcome to Daily Editorial here on the KE Report. It is Thursday, October 16th. We are chatting precious metals with Brien Lundin, editor of the Gold Newsletter and our host down at the New Orleans Investment Conference. Creeping up on us here, Brien, November 2nd to 5th. Chad and I will both be there. Hopefully, we will see a lot of you, our listeners, there as well. Please drop us a line if you'll be at that conference, and we'll arrange for a time to meet up. Brien, precious metals just continue to rip higher. Gold is up almost another $100 today. Silver has been up over $2 today, currently trading over $53. Gold is pretty much at $4,300. But I want to focus more on the stock side of things, at least right now, in terms of financings. We are seeing pretty much every company raise money right now. A lot of these raises are coming without warrants. They're all being upsized. They're all being closed quickly. And especially in the juniors, it's the largest raises that these companies have ever done in a lot of their company history. Just want to get your take on this flood of capital. Yes, some of it is recycled money. I'm sure some people taking profits and then moving further down the food chain to invest in these financings. But Brien, I can't remember a time in recent history, really in the last over a decade now, that we've seen this many financings and this much money come into the equities.
Yeah, I don't think we've ever seen it, Corey, frankly. As I've been saying, the new $10 million financing is $100 million financing. We're seeing companies pre-resource financing at $100 million. It's unbelievable. And this kind of money, we need to realize this kind of money is not within this mining sector. It is coming from without. These are big ticketed, deep pocketed investors who are seeking a strategic toehold in the sector and writing big checks. There are not any investment banks in our sector. There are not any broker dealers that are writing $100 million or portions of thereof, 10, 20, $30 million checks to get into these pre-resource companies. This is the big money. This is the generalist money. These are the hedge funds, the institutions, the pension funds. Uncle Sam himself investing in these companies. So it is a sea change, a phase change in the entire metals and mining industry happening in front of our eyes, and we'd better get used to it. This changes everything.
Well, Brien, the logical question after this is now that all these companies are cashing up, can they in turn take the money raised and really create value with it? In the past, and it was a very difficult bear market, it was more of a keep the lights on money raise and a little bit of limited work. Now they really got some wiggle room to go out there and really do some meaningful programs. What's your outlook on what the industry can achieve with all this money that's been raised?
Yeah, my how the pendulum can swing, huh? We had good projects in cash constrained companies that were not able to really explore as they should. And now these companies, now, not just in the future, but after this summer, we've seen, or as a result of what happened so far this year, we saw so many exploration companies be cashed up and finally able to drill and getting great results. Now we're seeing an absolute avalanche of money into the sector, and undoubtedly a lot of that money is going to be wasted. It's going to be an extra drill when one really wasn't needed. It's going to be drilling targets that would not have passed muster in the past. So a lot of it's going to be wasted. But then again, some of these companies like Collective Mining, they have not touched the limits of what they're finding. And, they're getting $100 million to not only explore, but I think get a big step on developing that project. So it's really interesting what's going to happen. In the past, the juniors, the exploration companies, and even the development companies, they had to hold out hope that they could get bought out by a major. And now today, a couple of decades after the last cycle, we have fewer majors out there writing big checks. We have mid tiers that are more aggressive, but still not, really being aggressive to the point that we've seen in past cycles. And we have the junior developers being able to raise the kind of money that would put development of their projects, within their view and capability. So I think what we're going to see as this progresses is, yeah, we're going to see some of the mid tiers grow to become majors, but we are going to see a number of new producers that are going to be kind of lower tier, in the 50, 60, 80, 100 to 200,000 ounce a year spectrum, and just develop their own projects because they can get the money and the expertise that can be bought. So I think that the thing that's going to be a real scarcity in this market is not money. It's going to be human resources and drills. That's going to be the pinch point.
So, Brien, are you getting sucked into some of these plays that, as you said, maybe lower quality miners, lower quality projects, albeit pretty much everything makes money at these prices? So, is there an opportunity here to simply just ride this bull market with the lower quality companies? Or do you still need to stick to the higher quality companies and maybe give up some of those gains you could see in the crappier companies, but at least you have a bit more of a margin of safety?
Well, there's always a spectrum, but I don't know that, you can say high quality and crappy is one spectrum, but you can also say that, companies of resources advanced and early. You have exploration companies, whether an exploration company has a great prospect or a lousy prospect, that's in the eye of the beholder. But I think we do have to be exposed, generally speaking. An investor will want to be exposed to some of the exploration plays because that's where you have the real high potential, the ability to really torque up your portfolio, and these companies have the money to adequately explore their prospects. And we're going to keep getting some great results. I think that companies of resources are, as I've said over and over again, they're starting to get re-rated, but I think there's a lot of value still out in that respect. And companies on the Lassonde curve, you got to play that carefully, but they will demand, I think, a bit more patience, the companies that are developing their own prospects. But, I think they have the ability to bring in big money that can kind of smooth out the valleys in that Lassonde curve too, and have a big re-rating for them as well. So yeah, I don't like the idea that I'm being sucked into crappier companies. But I think, the quality of the companies across the board is rising as money becomes available to them. I think just about most of the companies now, at least the companies that are exploring in North America, I think they can get the money that they need to advance, and therefore they are advancing probably from, the crappy status to the, well, this is something worth looking at status.
Well, Brien, in this kind of a metals environment, the producers are going to be able to monetize the higher prices, and there's a lot of analysts to track that and quarterly reports showing the revenues. I'm sure it'll be record revenues for Q3. We'll be getting more and more of those as the next couple of weeks unfold. The exploration plays, if they make a discovery or if they press their bets on a discovery they've already made, they're going to get that traction. But if we focus on that middle group, the developers, the ones that have the resources in place, the economic studies in place, I keep scratching my head when I look at the tables that are being used as far as the metals assumptions in these studies, especially the older back they go, the more divorced from reality it seems. But then also even the sensitivities tables, most companies don't even have $3,000 or $3,500 gold prices in their tables yet. And here we are at $4,300 gold, and the silver stocks are just as crazy. A lot of the metals assumptions are at $22, $24 with maybe an upside case to $30 or $35 silver. We're at $53 silver. So is there a catch-up trade that's going to come when people digest these numbers in today's dollars? Are they being correctly valued in light of just how quickly things are moving?
No, I don't think they are. one of the things I was saying a couple of months ago was that the market, the insiders in the sector have grown accustomed to gold prices over $3,000 and have started to at least be comfortable with that and not worried about a big sell-off that would take us below that level. So at $3,000, everything works, everything's economic. It's a good place to be in the sector. Now we've got to get comfortable with $4,000 gold, $4,000 gold just a few weeks later. And we have yet to get comfortable with that. But you're right, none of those sensitivity tables, and this is something I've been talking about for probably a year and a half now, none of those projected, even at the top end, the current metals prices, because the regulators would have slapped their wrists if they would have dared to put that in their decks. Now they're kind of getting away with that by having those, their old tables in there showing, wow, what we would be worth at $2,500 gold. But then they have another line that just says, and by the way, at spot, these are the economics. And the economics are, setting a new standard, setting a new bar for what is acceptable in this market. We are looking at, in some cases, IRRs over, that are in 3 digits at current metals prices. So, yeah, the market has not re-rated those. A long way of saying you're absolutely correct. And it's not just re-rating, but it's projecting. So if the market starts looking at what some of the gold prices that the big Wall Street banks are talking about, like $5,000 gold or higher, at some point when this market really gets fevered, they're not only going to be valuing these companies on what the current metals prices are, they're going to be projecting in the future. What is this? Could this be worth at $5,000 gold? So that if gold goes up 25%, is this company going to go up 150%? Well, it probably will. So let's place a bet. So we're not to that point yet, but it shows you how far we could go from where we are today.
Hey, the market is in the process of re-rating these stocks. Just look at some of those charts, and hopefully that momentum just keeps on going. But Brien, just real quick on those exploration plays, how do we even go about valuing these plays? A lot of them are pre-resource. Some are even pre-discovery. So if you are going into these exploration plays, should it be more of a shotgun approach where you spread your bets out? Because we don't know what's underground. These are higher risk. And quite frankly, even in a good market, exploration stocks still need to hit something to run.
Yeah, they do. And that's where it becomes more of an art than a science. Which companies, when you look at them, you start to sniff out that there's a potential big discovery there. And so many factors go into that. What does their technical team look like? What experience do they have? What discoveries have they had before? What are they seeing? What's in the area? What's the model that they're pursuing? Has that model worked with other companies in the area? What level of work have they done so far? I know what kind of geochemical anomalies are they looking at? What are the geophysical anomalies? There's always a geophysical anomaly, by the way. There's never been a geophysical survey done that hasn't revealed a compelling drill target, because every one is a Rorschach test. But you can find, with a little bit of experience, you can find some indications thereof, even for a non-professional, non-geologist. So a lot goes into it. The ability, one of the factors that used to be really important was the ability of the company to properly explore a project or projects without overly diluting their share structure. They can pretty much do that now if they've got a decent project. So it's always been tough to value a company that is, as Doug Casey put it many years ago, is a burning match. Impossible really to value it. You just have to look at the potential and look at it as a bet.
Well, Brien, there's a couple different flavors of exploration companies. Want to get your thoughts on what you're most attracted to. There's the pre-discovery play where it's a team going after new targets. They've done some science, like you say. They've got these anomalies. They've got these Rorschach tests, and they think they got some drill targets. There's companies that are post-discovery. They've made a discovery. They're pressing their bets. They're expanding. And then there's the prospect generator model where they're drilling multiple projects using somebody else's money, or they have partners that are drilling and they're trying to keep an option or royalty on it. Which flavor animates you the most?
I like everything animates me, to some degree. It depends on each story individually. I do like the pre-discovery plays. The things you want to look at there are, again, what's the story? What's the model? What are they pursuing? What evidence do they have so far? Who is the team? If a good team, a good management group is starting a new exploration play, then you want to try and get in early. You want to get into good plays early. And that's why you have to go, not to talk my own book, but talk to everybody's book. You need to go to the conferences. You need to subscribe to the newsletters, the unbiased, objective newsletters that are left out there. You need to see what everybody else is talking about and try and get in on the good deals early. It's a mix, but you've got to watch these companies, in some cases like Prospector Metals, I'd love that target, had been talking about it for over a year before they drilled. And then they told the market that they had something. They got visible gold, and they had that visible gold in 50 meters of an intersection of a very similar rock. And they told that to the market, but the market wasn't looking at it and wasn't appreciating that fact. And that's the kind of hints that this inefficient junior mining market delivers every now and then, that if you're watching closely, you can figure it out and place a more educated bet. So, that's part of it. But if you go to these conferences, you go booth to booth and you talk to the companies and look at the management team, look at them look in their eyes and see the story they're telling. And if they're excited about it and their positions are aligned with yours, it's a good indication.
All right. So, Brien, a lot of opportunities out there then. You shared Prospector Metals with us, but care to talk your book? Care to share any other stocks that you think still have some great potential?
Well, I'll tell you what, let me look through my portfolio here. I do own Aftermath Silver, which is one of the silver plays that has not moved much in recent months. They're very quiet, very non-promotional, but there's a lot behind that story that they won't say because they can't. And one is the tremendous manganese value of Barangela. If it was statistically valid, which it is not, and if it was non-promotional to say, which it is not, that they valued their silver resource on a silver equivalent basis using manganese, it'd be one of the largest silver deposits in the world. So when and if they get that into production, I believe it looks like they've solved the metallurgy and they can actually exploit the manganese. Their cost of production may actually be negative for a very significant silver production. So that's a play that I think is still flying under the radar. I do own that one. What else do I like here? I like, in that same vein, I like BlackRock Silver. That is a silver company that hasn't moved as much as some others very recently. It has had a good move, but I think it's got more ahead of it. I do own that one as well. Man, everything is just moving. Contango Ore is a great story. It has had a big rebound. I think it's got more to come. Great management team. I do not own that one currently. I like Delta Resources. They have had kind of a management shakeup that's kept it constrained a bit recently, so it has not participated in as much as other companies have. I do own that one as well, and I like where it is. So, that's probably enough for today, but there's a lot of opportunity out there. It is a target-rich and opportunity-rich environment.
Oh boy, is it ever, and it's a full-on bull market. So lots of opportunities out there. Being invested obviously is working in this market, but always seeing maybe what stocks haven't run or which ones are doing the work that can provide that extra boost, I think, is probably the most important thing you can do right now. Brien, thank you as always for your time, and everyone click the link in the show notes to learn a little bit more about that upcoming New Orleans Investment Conference. Again, November 2nd to 5th. Hopefully we will see some of you there. Brien, thanks for your time. Have a great rest of your week.
Thanks, guys. You too.